Hey guys, Jesse Malik here from Indy Mortgage. Let's talk about credit scores for a minute. We all know that your credit score is incredibly important in terms of getting your mortgage and what rates you're going to pay. So let's dive into it here for a little bit. So there are two different types of credit scores. Your first is the Equifax credit score. The other is a TransUnion credit score. So your Equifax score is a 6-year history, whereas TransUnion's only a 3-year history. So for that reason, lending is primarily based on the Equifax score, which is typically a slightly lower score than your TransUnion. We use TransUnion as a secondary look to just make sure that everything is reported on the Equifax properly. So we do look at both scores. In terms of finding out what your score is, I know a lot of the bank apps have now added a credit score portion. However, those are mostly TransUnion scores, so they're not really what we're going to be looking at in terms of lending. So it is advised that you do pay attention to your Equifax score, not just your TransUnion. So if you wanted to look at your Equifax score, you can actually go to equifax.ca and they are obligated to give you one free report per year. You can also download an app called Borrowell, which I'll put the link down in the comments. That gives you monthly updates. It actually does update weekly, but really your score doesn't change that often. So it's pretty much a monthly thing. And I'm sure most of you have probably heard of Credit Karma. That's actually your TransUnion score. So you could use that as well to monitor your TransUnion. Now, looking at what your score needs to be, the minimum you need on the A side would be 600, with most lenders sitting at 640, but some lenders will allow 600, depending on the circumstances and what type of lender it is and your down payments. If you're under 600, don't worry. That doesn't mean that you can't qualify for a mortgage. It just means that you're likely going to have to go into an alternative lender with a slightly higher rate and a lender fee. Typically, these are only a 1 to 3 year term. That way, you can reestablish your credit and then refinance out onto the A side. So if you have credit issues, don't worry. There are still plenty of options for you. We've even done people that have consumer proposals that have been discharged. So it's not like it's the end of the world if you have a poor score. Now let's talk about how do you increase your score and what really makes up your score? Because I get a ton of questions and a lot of people saying, hey, is this going to affect my credit score when you pull my credit? I really don't want to hurt my score. And the answer is, well, yes, because inquiries do affect your score. And whenever we do a pre-approval or an actual live mortgage application, we do have to do what's called a hard check. So it will affect your score. But the good news is that inquiries only affect your score for 10% of the score, and typically after 2 to 3 years, those fall off, and it's really not that big of an issue. So as long as you're not running around and applying to 7 different banks and trying to get 6 different credit cards and car loans from different lenders, it's not going to be that big of an issue to have 1 or 2 pulls on your credit score. What is really important is your credit utilization, which makes up 30% of your score. So that is the easiest way to actually increase your score, because with it being 30%, it makes up a large chunk. But really what you can do, let's say you have a $1,000 credit card and it's at $1,000. Or your balance is $1,000. You've maxed out your credit utilization at 100%. But if you pay $500 onto that credit card, your credit utilization is going to drop down to 50%, which is going to boost that score. And if you can get it down to under 35, that gives you basically the best marks for that area. The other area, which makes up a massive portion, is your payment history, which is actually 35% of your score. So if you're missing payments, that can affect you for a very long time, because like I said, it's going to last for 6 years on that score, on your report. So you want to make sure that you are making your payments. If you've missed any payments, try and get them caught up. Ask the creditor to say, hey, this thing's in good standing. Adjust that on the credit report for you, because it will help. The other couple things that do affect it is your credit history, which is 15%. So if you do pay off a credit card, don't close it, leave it open, so that way that history stays on there as well. And then the other one is your credit mix, which is 10%. Really, that's just how many different types of credit you have. So do you have a car loan? Do you have a personal loan? Do you have a line of credit or a credit card? Obviously, the more you have, the better the score, but you do want to be responsible with that. And like I said, payment history and your credit utilization are the most important. So you're going to want to focus on making sure you're making those payments and getting your debts paid down. If you have any questions about your personal credit report and whether it would qualify for a mortgage, or whether you need some credit counseling and how to kind of some direction on how to get that score fixed, feel free to reach out. My phone number is 519-870-3503. I'm happy to have a conversation about it. Have a great day.